Today we're going to talk to you about our dividend investment strategy for September of 2022 and how much we made. We're going to be achieving FIRE in 2024, and how we're paying for that journey is through dividend income. So stick around, we'll let you know which stocks we're invested in and how much they paid us in September.
Then speaking of dividends, our goal was to achieve $30,000 per year in dividends in 2024. It's not gonna happen, but you have to remember our initial goal when we started this year was $25,000. Here's what is gonna happen today. We're gonna divide this video in a few parts where we're gonna tell you the companies that paid us dividends on this month. We are also gonna share with you a breakdown based on the different asset allocation, and something new. If we stick until the end of this video, we are going to tell you how much we have invested to achieve the amount that we did in September 2022. We consider ourselves
Hybrid investors.
in what? It's a fancy name, right?
Yeah, so we invest in dividend paying stocks, ETFs, and real estate. So we have our home here in Toronto and a condo in Brazil, as well as our investments.
Exactly. So if you like this video, don't forget to just press the like button and help us spread our word. We are so excited to be sharing our journey with you, which actually started in 2021. And off of that, let's go direct to the point, tell you the companies that paid us dividends in September 2022.
First one we're going to talk to you about is Manulife. Manulife is an insurance company here in Canada, and it falls into the financial sector of our portfolio. Year to date, the stock is actually down 12.69%. However, we currently own 2,000 shares, which paid us a dividend in September of $660. And year to date, we have received $1,980. So even though the stock is down this year, it continues to pay its dividend, and we're getting a pretty healthy profit from it.
Yes, we are. The second company that paid us dividends is part of the energy sector here in Canada. The company is Enbridge. We have received $767.98. As of today, we have 893 shares. Year to date, we have received just over 2,300 from Enbridge.
The next one is Canadian Utilities. As its name suggests, it's part of the utility sector. We have 1,200 shares currently and have received a dividend of $533.04. Year to date from Canadian Utilities, we have received $1,599.12.
Yeah. Next company that we have is RioCan. RioCan is a REIT which invests in usually commercial and also residential, even though commercial is a higher percentage of RioCan. We have received $29.42. Year to date, 346 shares. Yeah, right, 346. Yeah. And if we convert that in money, we also received year to date $228.59.
Last one we're going to talk to you today about is ITOT. ITOT is a S&P 500 ETF. It's held in the US. We currently hold this one inside of our RRSP to avoid all of that US withholding tax that people like to talk about. ITOT is part of our global investment. We received a dividend in September of $288.77. We currently own 713 shares, and year to date we have received $659.82. It's worth noting that ITOT is the one that we've actually increased inside of this month's portfolio. We added to ITOT since we last had our dividend check-in with you guys about this quarter.
Yeah. I was going to say 3 months ago, which is a quarter. How much have we received in September 2022?
So in September, when you add all of those dividends up, we have received $2,279.21. So we're consistently staying over $2,000 now, which is amazing.
Yeah. Now it's time to share with you the asset allocation and how much we have received up to this point. The graphic that you can see on your screen, you're gonna see the different asset allocations and how much we have received, as well as the percentage of those assets. Starting with telecom, we received $2,634.94. It does represent 14% of our dividend income.
The next one is utilities. We have received year-to-date $3,446.76, which is representing about 18% of our dividend income.
The next one is financials. You're gonna see like a big chunk of money on our financials. So we received $8,881.02, which is around 47% of our portfolio.
Yeah, and just a side note, that is half basically of our dividend income. And in order to achieve that number, we actually have 5 individual different stocks in there. Some could say we're overweighted in the financial sector, but we have confidence in the Canadian financial sector. So we're good with what we have. I think we're going to stick with it for a little bit, see how it goes, maybe add a few now that things are down again.
It doesn't mean that you are not increased to the other positions which we actually are.
Yeah. Next one is REITs. We have received $228.59 year to date, and that represents right around 1% of our income.
We also have ETFs. Like when we mean hybrid investors, that's exactly the case, because you have seen dividend paying stocks, but also ETFs is part of our portfolio. What we try to do on our case is having ETFs within our RSPs. So RSPs is the same one as the 401k in the US, if I'm not mistaken. For ETFs, we have received $989.78, which is around 5% of the portfolio.
And we're not really relying on those ETFs for income per se. It's a nice benefit, obviously. It allows us to buy more of those particular ETFs, but the real reason behind them is their growth potential. So we're holding them in our RSPs because they're actually US based funds covering the US market, both the technology market and the total market. So we're holding them there. We're hoping that they grow. Right now, when everything's down, we're trying to add to those.
Share in the comments below if you are feeling the same way as we do.
Oh my goodness, this roller coaster, it's crazy.
It is, it is.
The next one that we're going to cover is healthcare. We have received $337.98 year to date, and that's right around 2% of our dividend income.
Last part of our asset allocation comes from energy sector. Up to this date, we received $2,303.94, which is around 12% of our portfolio.
And so we spoke a little bit about the ETFs being based in the US. We also have another global ETF, XAW. So when we look at the Canadian portion of our dividend income, that comes out to an amount of $17,495 for the year, which is about 93% of our actual dividend income is coming from our Canadian portfolio.
Go for it.
Oh. The remainder is coming from our global portfolio. Our global portfolio is really more for growth, not so much for its dividend potential. But it does pay us some distributions. So we have received from our global side of the portfolio $1,327.76, which is right around 7%. Note that that global portion is actually, the majority of it is actually in US dollars. So we're receiving those distributions in US dollars, which is a little bit more beneficial than the Canadian dollar these days.
Especially now.
But we're just putting it back into those ETFs.
So 1-to-1, right? We are not even doing the conversion here on these numbers.
Yeah, no conversion. So we're just treating it as though it was Canadian funds for this purpose. So adding it all up, year to date, we have received from our dividend income $18,823.01.
1 cent.
It's important. You gotta keep the 1 cent in there.
You gotta keep it there, exactly. When we say that 18,000, it means that our initial goal of $25,000 is gonna be achieved by the end of the year, just based on the projections that we have on our lovely spreadsheet.
Yeah.
When we try to compare the 18,000 with the $30,000 that my lovely wife decided to have, we are around 63%. I don't think that we are gonna make to the $30,000 this year, which is totally fine. We need to keep pushing ourselves more and more, so we will be able to hopefully reach fire somewhere in 2023-ish. No, it's gonna be 2024.
I wish it was 2023, but right now things, as everybody knows, they're a little haywire.
Yeah.
So, yeah.
Keep doing what we have to.
Yeah, and that $25,000 that Jean was speaking about, we might not actually have that in our pocket by the end of the year, but because we've been adding to our dividend positions throughout the course of 2022, in our spreadsheet, we know that we're already well over that $25,000 for 2023. So if we were to hold what we hold now at this moment in time in our portfolio, we would be well over that $25,000 for the year.
100%.
If that makes sense to everybody. I hope I didn't confuse people.
If not, use the comments below and ask your questions. We are more than happy to share with you what we are doing. And you can say, it makes sense, it doesn't make any sense. But
yeah.
this is not financial advice.
Yeah.
Please keep that in mind. If you are starting to invest now, look what it fits your portfolio. All that we are trying to do is hopefully inspire and say, like, raise your hand or red flag, it doesn't make any sense. We just hope that by doing and sharing with you what we are doing, we can inspire you to do the same. But again, not financial advice. Please do consult someone, or if not, start checking our YouTube videos. I'm kidding. Thank you very much for staying up to this point. One of the things that we did promise at the beginning of the video is telling you how much we have invested. As you know, we received $2,279.21 for September 2021. And the question that I usually have when I look at around of how much people have been investing, be it on blogs, on podcasts, and also on YouTube, sometimes I don't know. We are transparent about our financial situation and we wanted to share that number with you. So in our case, since we have started investing, which it goes back to, oh God, long time ago, but sharing the journey with you, it goes back to 2019. So up to date, the cost basis for those stocks that paid us dividends in September 2022 is $202,674. So there you go.
Yeah, it's just to give you guys an idea, because we have had some questions about how much was invested in order to reach those numbers. So it's only for information. Everybody starts somewhere. We started somewhere. So it's
started from zero. So
it's just about getting going, getting into the market, and being consistent time over time. That's what it is.
And that's the cost basis. So if you look at how much we have gained, that is not included on this number, and we're gonna keep it for maybe in the future. Who knows? If you wanna know that, share in the comments below. Share the video, please. Help somebody. Help us to be available to others, not be available, to show up on the screen of more people. So we're happy to share our journey to financial independence with you.
Yeah, that's the video for this week, guys. We hope you're all doing well. We hope you're enjoying the fall as it rolls in, and we'll see you next week.
Take care, stay safe. See you later.
Bye.
Bye.
Good job.
Okay.
Guess what time it is?
Yeah, so I just want to have something like this because I want to show the number. So you have some point at something, and I have to point at something else.
What are you pointing at?
It is going to be a number with the 2000 and something and top stocks or whatever.
Got it?
I believe so.
All right. Cheers.
Cheers.
To us.
To us. And to you.
All right. Ready, Freddie?
I believe so.
Okay. Okay.
And it does represent 14% of our portfolio.
Or dividend income?
Dividend income. Yeah. Well, I have to say that.
Just say dividend.
Yeah.
Of our dividend income.
Yeah.